BUA Cement half year H1 2026. This is we encourage you to make a time and read this analysis, please. So from the headline, we say that profit rose over 79.6%. So when you see these things, you're supposed to ask yourself, there's what you call accounting shenanigans. Like the best way the company, they cook up a lot of things. Sometimes profits are not cash. So these are the reasons why you don't just celebrate profit, but they just want you to celebrate profit. You need to dig in. That is why sometimes when this report comes out, you be like the company is gonna go up. Why is it coming down? Because you don't know the quality or the nuance around the profit. So a lot of things, even if you sell on credit, it can be part of profit. If you book FS again, it can be part of profit. If you even acquire an asset at discount, it can be part. So a lot goes into profit. So that is why it's always important. Yeah, for the hypes and the vibes. Yeah, it's good to celebrate 1000% profit, but always dive into the numbers. And if you don't know how to do it, that is what we do here. We help you dive into the numbers so that you know the quality of the profit. Okay, so let's dive in. So you can always come up and read, see what happened, the summary. That's why we give it a heading. What happened? You see that the headline numbers were strong. Revenue grew by 25.6%. Gross margin expanded to 58.6. Net profit was the one that grew by 79.6%. Then energy cost line. So all those things you can read up, but let's dive into the graphics before we get here. But always read this, what happened, then what we now found out, the evidence to back up what we found out, and then going forward, the nuance or the thesis around the investment. So always read this, please. You can see that people are reading it. Make out time and read more. Okay, let's go into the graphics to show you the earnings, the charts, and the things that are not here too, that we can say more to back up, and also read the earnings insights that comes out. It comes in series. So read. Okay, let's go. This is let's first of all, hold on a sec. It's loading. So you already, these are three. We make out time to go through it. Okay. So that to do it for you guys. Hold on. Hold on a sec. Okay, sorry, we are back. So the first thing we look at what the market is saying, the price. So currently the price is sitting around 324. So you can see the trends of the price. Top of the top was around 400 plus, so it has dropped, coming back. So this is the current market price. You can see the swings if you know how to look at technical chart. One price started in 21 and stuff like that. This is why people sometimes they tell you to hold for the long run, because in the long run the shares went up, provided it's a quality business. But like we keep saying this, that you are holding for the long run is also important if you can get a sense of what valuation looks like, because the valuation might most likely have told you that you should not be buying here, that it's overvalued. So you can wait. Even if you have cash, you can have cash in your brokerage account. Not every cash in your brokerage account is meant for averaging in. There is always a right time to average in. Okay, that is what valuation is all about. Okay, now we have seen the price. Let's now look at the income statement side of things. Okay, so this is let's blow it up for you guys. Okay, you can see that this is the income statement. You can make your comparison. This is revenue now in 26. Revenue improved by that 20. You see that over 726 billion. You can see that the cost of sales also increased naturally as business is increasing. But the devil in the detail is now other income, stuff like that and stuff like that. Is this FX propped up the middle line and the bottom line? So in FX they put over 16.5 billion at FX here, and even though it's not realized first, there was a time due to Naira appreciation, there was a time they were booking FX locks too. So this time I had it has flipped into their favor. But in earnings, we call these things are not operational. They are not operational. It is operational means sometimes based on the business and stuff like that, since you can control. But these things are external macro. So that is one line to pay attention, this effects there. Then if you add it up, then also from the tax side of things, and so that is why you see the profits growing in, and then the margins are looking okay, we must admit. So this is one thing to take out from the income statement. Then if you look at the balance sheets, one item to look at the balance sheets, of course, you look at the assets also grew by 3 points. So asset is in over 1.9 trillion in assets. Then you look at the equity. You can see that the equity dropped. Yes, the equity dropped. Why? Because of the dividend. They tapped into the return earning because they paid dividend, and also equity dropping too because they tapped into a whole lot, which we are going to explain. But this is what the balance sheet looks like. Then the borrowing also ballooned. They had a loan from IFC too. So this is, then look at the ratios, still pretty much liquid, but from the, if you overlay it with quick ratio, not looking so great. Then liability going up compared to previous because of the borrowing, and you are paying dividend, stuff like that. So even if it is a great business, this is the lessons we want you to take, that great business can do a whole lot along the way, and that is so sometimes you see it reflecting on the share price. So that is why these analytics are important. Like, okay, even if you are gonna stay here for the past 20 years, along the way they do a whole lot. So that is why analysis are very much important. Then the free cash flow, of course, so they had the free cash flow also dropped. The free cash flow also dropped 217 billion as against 300 because of also a whole lot. So now let's fast behind the figures. Number one is, remember to subscribe to the channel, like, share, go to X and download those graphics for yourself. So revenue actually is operational, but majority of the revenue apart from the FSN is operational. Like we have said, they book an FXN, so you note that. Then also they are filing in terms of segments. Businesses have segments, but BUA Cement files they do a single entity filing. 100% in terms of geography, their sales is almost 100% to Nigeria. Then the only thing they did is their product, there was a product split into two: the bagged cement, that's cement in bags, and the one they call box cement. So bag and box cement. But the bag cement almost contributes close to 94.5% of the revenue you are seeing. Then the box cement just contributes. Box cement contributes the remaining, and also there was a positive growth. That the box cement all of a sudden had positive growth from revenue of 236 million to over 40 billion naira. So that is a jump in the box cement, but bag cement is the storyline. Then another concerning thing to point out is of course they paid dividend, but you are paying dividend from debt. Remember, you had a facility from IFC, then you are paying a dividend. Even though we still post about it, so talk about it, you are paying dividend of 338.64 billion, and that is way above the net profit you booked, which is 324.88 billion. And that is why you now tapped into your balance sheet. So it's a debt funded dividend, not earning funded. That is why you see the return earning dropping and equity also dropping. Then another concern is the free float of the business. The close to 95.78% of the shares is held by two people. One, the chairman being Abdul Rabiu. One. Then the other arm is his own company too, which is BUA Industries Limited, also is holding some. So between these two entities, BUA Industry Limited and the chairman being Abdul, they are holding close to 95. This is what you call closely tied. Then you are just floating 2.31%, which is just within the tune of 266 billion. So that is why sometimes you see people complaining of them selling their shares. They are not getting the offer because 95% is being held. And remember, the majority holders also make decisions. So that is why you might see them making that decision. It can be linked to the decision of paying dividend from debts, because the more shares you have, the more the voting power and stuff like that. Let's not get too technical. Then another thing is what you call key man risk. They tapped into a facility from First Bank and the Union Bank, and that facility had a personal guarantee from him being the chairman, and also BUA Limited as the company too. So these are some of the findings. Great earnings with this side. So you average it out and make your decision. So see you on the next one. You always read this word to word so you can get a sense of H2 coming word to word, the nuances around stuff like that. Then it can help you make better decisions. So see you on the next one.